People would think you just can't make money on red days, especially when the markets are selling off. This morning, before the sell-off, the markets look like this in crypto. You can see they weren't looking well. After the sell-off, which occurred over the span of 4 minutes, the markets look like this. Again, how would it be possible to make any money on a day like today? This video will prove you can go long at spot and make profits on days like today. I'll show you real trades. Stay tuned. This could be a literal game changer. This morning, before the sell-off, the market looked like this. It doesn't look very attractive. Then after the flash crash, the market looked like this. Again, the difference between the two would sort of preclude making any kind of profit, anything significant. After nearly 4 decades in financial markets, one thing is very, very clear to me. The rules of success are counterintuitive. The word counterintuitive means contrary to intuition or to common sense expectation. It kind of goes like this. If you look at a red light, you stop. If you look at a green light, you go. That's just common sense. Inside financial markets, if you do that, you're going to obliterate your account sooner or later. Many of the rules that apply in life are just the exact opposite inside financial markets. It takes a lot of time, effort, and energy to unwire and rewire yourself. A lot of people have been hurt financially from this flash crash. Inside Zone 1 and Zone 2, people act intuitively with common sense. Of course they get angry. Of course they get upset. They throw their arms up in the air and say, "Enough, I'm done with this rubbish." That is exactly what the institutions want you to do. That's why it's critical to get out of Zone 1 and Zone 2. There where you lose money and you lose it consistently until your account is gone. We have to think very, very differently, and it does take a lot of time to do this. You have to think counterintuitively. The red is not your enemy, and the green is not your friend. To get out of Zone 1 and Zone 2, and these are the 4 stages that all investors and traders progress through to become consistently profitable and attain quality of life. Escaping Zone 1 and Zone 2 is the best thing that you can do for your profitability. There is no profitability inside Zone 1 and Zone 2. And if you get it, it's just luck. Because whatever those profits are, they will disappear. Instead, inside Zone 3 and Zone 4, it's a completely different realm. The bridge from Zone 1 and Zone 2 into Zone 3 and Zone 4 is learning. As professionals, we're learning machines. We know that we win or learn and never blame, because we're not going back into Zone 1 and Zone 2. Another thing to realize is the capitulation spikes, like just what we experienced recently. They flush out the longs and attract the shorts. We can see over the past 24 hours, there's been in excess of $1,000 million liquidated. And 835.75 million of that was long liquidations. However, there were about 200 million of short liquidations. We can also see that over 175,000 positions were liquidated. This is a lot of positions and a very, very high amount of liquidations. When people see capitulation, the first thing they do is run, and they run like hell. The opposite to what feels right is counterintuitive. I'll show you with the trades coming up how I made money today. I acted counterintuitively, and you'll see it's very profitable. Just to get a sense on the crypto market, crypto overall decreased 7.42%, and we can see Bitcoin, Ethereum, Binance Coin, XRP, they're all down quite substantially. The greatest gainers in the top 100 in the past 24 hours, well, there weren't really any. When looking at the greatest losers, top 100 past 24 hours, we can see double-digit negatives. Where are these potential gainers? It's very counterintuitive to buy on red and to sell on green, but that's another rule that you will learn after many years inside financial markets, especially on days like today. In episode 986, FOREX plus your investment returns, I gave a lot of very helpful tips and tricks on how to do this. To detect opportunities, we must gain a perspective on what the market is doing. That's why we look at the structural levels through the CTKS method at Tier 1, Tier 2 and Tier 3 charts. Before the markets open in the last trading session, I posted out quite a few charts on Twitter, or X. I've applied the knowledge inside the masterclass and especially LV21. LV21 requires all the knowledge of the masterclass to apply effectively. It was a pretty ugly market out there, but I'm going to show you that returns are not only possible, they're probable, but you have to have the knowledge. And you must be prepared to buy a capitulation spike. To buy capitulation spikes, we layer in, and that's a masterclass routine. What you're seeing here is PYR, and you can see this trade is from today. All position sizes for these demo trades are $500. What you can see here, 500 in, 536 out. You don't need to make big percentages to make big percentages, but this one's not bad. It's about 7.3%. Always look to the annualized return on investment. That's what you want to keep your eye on. And you can see this particular trade happened quite quickly in under 3 hours. Try getting that kind of bank interest in under 3 hours. You'd be lucky, well, you couldn't even get it in 12 months. Here's another trade from OP. Again, same standard size, 500, 539 return, nearly 7.9%, say 7.8%. Always look to the annualized return. That's your key. What about GAL? Yeah, she's a fine gal, this one. What you can see, the culmination of these sell levels, 1130, that returned amount, and the culmination of the buy levels, around 1000, 2 lots of 500, about a 13% return, and a crazy annualized ROI. How about another one? This is ANT, and you can see this was actually occurring as the crash unfolded. 500 in, 553. Back out, nearly 11% return, and always look to that annualized return on investment. It's very important to track that one. We've been having a bit of fun with UNFI recently, and you can see again, this is inside the crash. 500 in, 532 out, about 6.56%, and the annualized return on investment is quite good. How about another one from UNFI, just a different time? We see 500 in, 530 out, about 6.2%, and a good annualized return on investment. The reason for showing these trades has nothing to do with the fact that I made profit. I want you to make profit. And you can't make profit if you don't have the knowledge and lean in with courage. You don't gamble, you lean in scientifically. Opportunities are always resetting in the market. Just because you see double-digit negative red doesn't mean anything. It means absolutely nothing at all if you can buy at the right level. You literally make profit where you buy. In episode 985, I talked about how to actually make huge returns. I gave an illustration of UNFI where I took $2,500 and then recycled the trades. I've been recycling trades on UNFI a lot recently. What recycling actually does, you get the profit without having to put in the capital. I explain this in episode 985. It's really well worth your while and time to go back and have a look at that. It can show you what you can do. The basic idea is this: if you put 500 into the market and you get 5%, that's $25. And if you use the same 500 each time, 3 times, and get 5%, you get 5% once, that's 25. You get it again, same 500, that's also 25. And the next time you use that same 500, you got it, 5%, 25. You've made $75 off recycling the same money. That means that you take the profit, and what it actually does is something really cool, and I explain it in that episode. It boosts your return on investment, and your annualized ROI comes up, and it comes up very fast. When we look at UNFI, we can see that during that flash crash, price came down. Now this is a closing price. When a price closes, it doesn't necessarily mean that the tail, the low, is there. Sometimes the tails come all the way down, and we love buying tails. One thing to bear in mind, I made the profits that I'm about to show you during this period of time. In fact, on Unfi, I made 7 trades during that capitulation spike, and some of them did quite well. They were in excess of 10%. One thing that's very counterintuitive, people get greedy. Greed inside financial markets will decimate your account. And you can see that all of these trades are made today. What about these trades? Where are they from? 5 trades. They're from yesterday. What I've done here is to show you 14 more trades basically done within the past 24 hours, and they add in to the previous trades done on Unfi. How is this useful to you? Because that's why I make these videos. The concept is, if you pick the right kind of token with the right kind of volatility, and you'll understand that from a lot of different signposts. It does take a bit of knowledge to do, but the concept, you can stick with it and you can just roll your returns over and over and over again. One thing to note, Unfi actually spiked down below $3.50. How did I know to just ease off the accelerator and not to trap myself at higher levels? The first and most important thing, I marked up Unfi with the CTKS method. The CTKS method showed that we were very close to strong overhead resistance, had a fresh air gap down to support. As well, I knew that the S&P 500 was starting to lose support. I put that out on Twitter. The Nasdaq was under support. Tesla and Apple didn't look well. And there were a lot of signs inside the Tier 1, Tier 2 and Tier 3 charts that predicted that something could go down. It was a kind of a make or break moment. If you ever see me very active on Twitter, I'm there and very active for a reason. Let's have a look at another trade. This is Acro, and I call it Acro 1 because I've got a couple of trades from Acro. You can see, same deal, buy 500, sell 530. That's a little over a 6% return, and look at the annualized return on investment. It is quite nice. This is a second trade on Acro. You can see the same thing, 500 and 528, nearly a 5.8% return in under 24 hours. Without the masterclass knowledge, I could not do these trades, and the masterclass has basically taken 40 years of knowledge inside financial markets and compressed it into one course. And Perperatum is offering a CTKS partial masterclass scholarship. Thank you, Perperatum, for your very kind generosity. And if you would like to apply for the partial masterclass scholarship, the link is in the description of this video. What is counterintuitive? When you get a capitulation spike down, people are just so full of fear. That fear will drive price down, 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 and then the shorts who pile into the trade and say, I can't go wrong, it's going to zero, will get hammered. The longs who think it's going up, they'll eventually get hammered by the shorts. The shorts who think it's going to zero will get hammered by the longs because the longs will buy in and cause the shorts to cover. What you're doing effectively is you're understanding the psychology of the market. This is a very, very skillful thing to do, and you can do it definitely. Just knowing about it in the first place helps you to see it in real time. The question is this sell-off over? I don't believe it is. But it doesn't matter anyway because we trade the charts that we mark up through the CTKS method. We know where the structural support and structural resistances are. Therefore, we have safety and security in knowing where things can move to. And of course, the most important thing is just to mark up your own charts with the CTKS method. It's very important to empower yourself. There are many rules that you need to know in order to get out of Zone 1 and Zone 2 into Zone 3 and Zone 4. And you can already see a rule playing out here. The stock market sets the gravity for the crypto market. A lot of people think that crypto and the stock market is completely independent. That's a rule to lose money, unfortunately. There's something very important showing on this market sentiment chart. What we can see through here, there was a weakening of the trend, but that's not the concerning thing. What's the concerning thing is there's an undercut here on crypto sentiment. That is a problematic thing. We could see more sell-offs coming in the next couple of days, potentially the next week. But we're not concerned by sell-offs. We prepare for them. That's what the CTKS method is all about. It's about the safety nets inside market structure. A lot of people will be calling buy the dip. I am personally not so enthusiastic. You know that I buy the dip anyway. I bought this and all of those trades were pretty good because you can just turn them over. Knowing where to sell and when to sell is very important. And you don't need to get a lot. You just need to get a little and do it a lot. That's another counterintuitive rule. It's very important to think counterintuitively. We can see this weakening structure. A lot of people may say, oh, Bitcoin will base around there. Well, that could be the case, but it's more likely the probability is it is coming down. And it's coming down to a CTKS method structural level. We need to understand where is Bitcoin going from here. We saw a violation of many safety nets. These are structural levels, and this particular one held at around 25,344, and then we got gravitationally boosted back to this confluence of SL levels or Stanfield levels just here, just around approximately the 26,920 mark. There was a very good opportunity to make a lot of profit during that particular period of time. And what we do inside the masterclass, and this is literally the CTKS method, we buy at levels of security inside the market. What is a level of security? It's a level of structure. A tip that will really help you out. When I was looking at UNFI coming down, I was also keeping my eye on the Bitcoin structural levels through the CTKS method. I knew what Bitcoin was doing, and I knew that UNFI would follow that path. On days like today, people understand why the CTKS method exists. It's because you want to know where the safety zones are. Where are the safety nets? What's going to ping pong? Or trampolines. What are the trampolines that's going to ping pong price back? And where does it ping pong back to as well? If you turn on the Bitcoin Cash indicator, what you can see, there was a very strong level around that 173.30 mark. It did pass through quite a few safety nets, and this is exactly what capitulations do. But it came back to a structural level, and it's trying to turn, Bitcoin Cash is trying to turn that 186.30 in from a structural resistance level into a structural support level. If you looked at the chart like this, you'd be just absolutely and utterly terrified. Seeing something just plummet like this in front of you, you would think very naturally with common sense, and we know common sense doesn't help inside financial markets, but common sense would say it's going to zero. Counterintuitive thinking means something completely different. Capitulations pass through multiple SLs, multiple Stanfield levels before it gets enough support, and then it will rebound. That's why we can make money from capitulations. I would suggest that it's really important to apply the CTKS method to your own charts. To know where the structure is incredibly important. It's vital. One thing to be very aware of when you're looking at any specific chart, and you can apply the CTKS method to PayPal, Amazon, the S&P 500, bond yields, bond prices, anything that you want, silver, gold, copper, and that's actually what we do. Tier 1, Tier 2, Tier 3. What you can see with Ethereum, there was a massive smart money buy support in between 1593 up to this 1623 mark. Even though price came down, this is very strong gravity. It just rebounded it substantially. Market sell-offs can very quickly occur, and we saw this one occurring very quickly. From the tip up to the tip, from the bottom tip to the top tip, it was about 11.3%. You can see you can make money. When we look at BNB, Binance Coin, we saw this very big capitulation spike because it was following Bitcoin's gravity, and then we saw a bit of a bounce. What we're seeing right now, BNB is looking quite weak, especially when compared to Ethereum. Where were the safety nets? And this is why the CTKS method is so incredibly powerful. You can see that there was a safety net at $215.20, $215.20, and it really helped to rebound price up. Don't forget that BNB moves in directional correlation with Bitcoin. If you're looking at BNB, please make sure that you look at Bitcoin as well. What about Solana? We can see Solana sold down, and it has a very different structure from BNB, more akin to Ethereum structure. Let's actually turn on the CTKS method. We can see it passed through two levels of smart money support when price is above. It passed through two more, another one, didn't get down to this particular one, but it slingshotted, found support again, tried to retest the upper boundary. It's trying to get over this particular smart money resistance at around that 22.15 and the 22.22 mark. So just something to keep in mind. If it doesn't go above, where's it going? It's going below, down to around that 21.13 mark. If it can't hold on to here, where's it going next? To the 20.75 mark. This is exactly how you interpret these diagrams. We have a lot of Solana fans inside our beloved global family. Just keep your eyes on that smart money structural resistance level between 22.14 and 22.26. There is structural support between 21.07 and 21.16. I hope this helps you out. Please let me know in the comments, what are you trading right now? I'll endeavor to throw some more light on that in future videos. Total crypto market cap is a tier 1 chart. It's really important, and we could see that total crypto market cap was actually failing. It couldn't get through this $1.09 trillion mark. We got across under around the 17th of August. We have a very simple rule. If it's not going above, it's going below. And where was the below? Around that $1.062 trillion mark. And we saw it just cut through it. And then it got caught up at the next one, $1.019 trillion. And we've seen that it can't get above this one above, around that 1.063. And it's slightly weakening. This gives us a probability that we're heading back to the $1.019 trillion mark. Please keep this in mind. Because the alts tend to react to Bitcoin's gravity very quickly, if you start to see weakness like this and cut unders like this, it could tell you that we're going not only down to the next level, but potentially much lower. This could give you an early warning sign inside the markets. Please let me know in the comments, were you actually engaged in the market when this capitulation spike was actually occurring? If you were, did you participate, or did you find yourself going with common sense and saying, "Oh, I'm not touching that"? Inside financial markets, common sense is your enemy. However, logic and probabilities are your best friends. And the focus is always to gain as much courage as you can, but you gain that when you understand percentages. The purpose of this video was to show that even in red days you can step into price action when most people would be stepping out. Very sensibly, very logically, but logic and sensibility is not counterintuitive. That's just normal. We need to be counterintuitive inside financial markets. And you can see that you can roll your trades over the same amount of capital time and time again. Of course, you can also add to it. And remember, you don't need big percentages to make big percentages. And you can see that right here. You're after a big annualized return on investment. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again tomorrow. Bye for now.